Okay. Good morning, colleagues. May I call the meeting to order? And to start our event today, may I request Lindy, Head of Audit, to pray for us?
Good morning, everyone. Can we bow our heads for a prayer? Our Father art in heaven, dear Lord, we present ourselves to you this morning with thanksgiving. We thank you for allowing us, dear Lord, to come together, dear Lord, as fellow colleagues, dear Lord, and citizens of this country. We ask, dear Lord, that you may open this meeting, dear Lord, and that your Holy Spirit may be with us, Lord. Provide us with wisdom and discernment, dear Lord, as we deliberate, dear Lord, on the plans for this country, so it may not only benefit us, dear Lord, but glorify your name. We ask that the plans that we lay at your feet, dear Lord, may be optimized and extended, dear Lord, into all territories, dear Lord, that we touch, and all the skills that you've given us, dear Lord, may be blessed to the glory of your name. And so, dear Lord, as you bless us in our coming in and going out, dear Lord, we ask that you may bless this meeting as well. Amen.
Thank you, Ms. Mlambo. The Honorable Minister for Finance, the Governor of the Central Bank of Eswatini, members of both Houses of Parliament present today, Board of Directors of the Central Bank of Eswatini, members of the Monetary Policy Consultative Committee, leadership of commercial banks and non-bank financial institutions, captains of industry, CEOs, distinguished guests, ladies and gentlemen, good morning. Good morning. I just fed you. On behalf of the Central Bank of Eswatini, I would like to extend a warm welcome to all of you to the 2024-2025 Governor's Annual Monetary Policy Statement. This year's theme is in pursuit of prudent monetary policy in times of uncertainty due to global trade disruptions. This is an important event which serves as a platform for the Governor to report to the stakeholders and the public at large on key domestic, regional, global economic developments, the bank's operations, and the monetary policy stance adopted by the bank during the reporting period. These are carried out in fulfillment of the bank's core mandate of maintaining price and financial stability in the Kingdom of Eswatini. In his address, the Governor will also share the inflation and monetary policy outlooks for the upcoming year, including the rationale behind the envisaged bank's policy direction moving forward, which is always data dependent. Ladies and gentlemen, timely communication by the bank is essential for effective monetary policy transmission, which in turn ensures that the bank fulfills its mandate as expected. Moreover, it reflects the bank's commitment to accountability by clearly conveying to stakeholders the rationale behind its monetary policy decisions and oversight responsibilities. We acknowledge the fluid and ever-evolving nature of the global economic landscape, as well as the deep interconnectedness of international markets. Hence, changes in the global economy pose potential spillover effects to the region, particularly to Eswatini's major trading partner, the Republic of South Africa, and ultimately to our domestic economy. Therefore, this underscores the importance of constantly monitoring these economic developments and promptly responding to them through the formulation and implementation of appropriate monetary policies by the bank. Ladies and gentlemen, I would also like to assure you that the bank remains proactive in assessing the potential impact and implication of the US trade tariffs on the domestic economy and within its jurisdiction. Hence, the bank stands ready to intervene where possible within its jurisdiction. It is also important to emphasize the need for strong coordination between the fiscal and monetary policy during these challenging times. I am looking at the governor and the minister rightly sitting together. It is also important that structural policies are enhanced to support the monetary and fiscal policies and ensure the resilience of the economy to shocks. Ladies and gentlemen, today's gathering is being held in a hybrid format due to the limited capacity of our venue. Hence, some of our stakeholders who usually attend this in person are joining us virtually. We sincerely apologize for this. Alternative venues were unavailable, a consequence of the timing and the required capacity for this event. Nonetheless, let me assure all participants, both those attending in person in this room and those joining online, that we will all have an equal opportunity to engage with the governor and meaningfully take part in today's proceedings. May I urge you to submit your questions via Slido, to which the governor will respond during the Q&A session. The code is projected. Am I telling the truth? The code is supposed to be projected on the screen, and for virtual participants, it is provided on the streaming platform. Ladies and gentlemen, on behalf of the board, the management, and the staff of the Central Bank of Eswatini, let me welcome you again to this year's Governor's Annual Monetary Policy Statement. We look forward to engaging in a fruitful deliberation from which the bank hopes to learn, reflect, and gather valuable insights to improve on its mandate delivery. Thank you for making time to be part of this important event. With these few remarks, may I now invite the governor, the 7th governor of the Central Bank of Eswatini, Dr. Phil Nisi, to deliver his monetary policy statement. Governor, and I thank you.
Thank you. Siyabonga. Program Director, the Deputy Governor, Honorable Minister of Finance, members of both Houses of Parliament, members of the Central Bank Board, members of the Board of the Central Bank, senior government officials, members of the Monetary Policy Consultative Committee, leadership of commercial banks and non-bank financial institutions, Central Bank management and staff, captains of industry, distinguished guests, ladies and gentlemen, good morning. It is indeed my honor to present to you this year's Governor's Annual Monetary Policy Statement under the theme, In Pursuit of Prudent Monetary Policy in Times of Uncertainty due to Global Trade Disruptions. Distinguished ladies and gentlemen, the year 2024 and the first quarter of 2025 have seen the global economy battling with multiple challenges which have weighed down on growth. I will allude on these challenges later on in my address. Even though inflation has broadly moderated at different speeds across economies, risk persists, and interest rates have broadly moderated over the review period but remain at restrictive levels. My address this morning shall outline some of the key global, regional, and domestic economic developments that influence the bank's monetary policy decisions over the past financial year. I will further provide insight on the short to medium-term inflation and monetary policy outlooks. Program Director, let me start by highlighting developments in the global economy. The IMF's World Economic Outlook, published in April 2025, estimates global growth at 3.3% for 2024, and it is projected to fall to 2.8% in 2025, before marginally recovering to 3% in 2026. The downgrades reflect in large part the direct impacts of the new trade measures and their indirect effects through trade linkage, spillovers, heightened uncertainty, and deteriorating sentiments. Program Director, ladies and gentlemen, you will notice that as I give the address, there shall be a couple of exhibits that are giving a narrative of what I am articulating. Advanced economies are estimated to grow at 1.8% in 2024 and projected to fall to 1.4% in 2025, before a marginal recovery of 1.5% in 2026. In emerging markets and developing economies, growth is estimated at 4.3% in 2024 and is projected to slow down to 3.7% in 2025 before recovering to 3.9% in 2026. The IMF has indicated that the growth impact of tariffs imposed by the United States in the short term varies across countries, depending on trade relationships, industry compositions, policy responses, and opportunities for trade diversification. The IMF forecasts global inflation to decline from 5.7% in 2024 to 4.3% in 2025, and further down to 3.6% in 2026. In advanced economies, inflation is projected to decline to 2.5% in 2025 from 2.6% in 2024 and edge lower to 2.3% in 2026. In emerging economies, inflation is expected to decelerate to 5.5% in 2025 from 7.7% in 2024 and further down to 4.6% in 2026. Global monetary policy conditions depict mixed trajectories in both advanced economies and emerging economies. Advanced economies like the US and the Eurozone saw a shift towards easing monetary policy as inflation began to cool down. Emerging economies, while facing inflation pressures, continue to grapple with high rates and more cautious approaches, reflecting the varied challenges they face. The IMF expects monetary policy conditions to continue easing. However, the heightened global economic uncertainty could stall the easing path as it poses upside risks to the inflation outlook. Ladies and gentlemen, let me turn now to the economic developments in our neighboring South Africa, which is Eswatini's major trading partner. South Africa's GDP grew by 0.6% in 2024, the slowest growth rate since 2020, following a revised 0.7% increase in 2023, underpinned by negative contributions from the manufacturing, construction, and mining sectors. The South African Reserve Bank forecasts GDP to grow by 1.7% in 2025, from 0.6% in 2024 and to increase to 1.8% and 2% in 2026 and 2027 respectively. South Africa's inflation rate marginally increased to 2.8% in April 2025 from 2.7% in March 2025 and remained below the lower bound of the SARB's 3 to 6% target range. Over the review period, the SARB decreased the repo rate by a cumulative 75 basis points from 8.25% to 7.5% by March 2025, citing an improved inflation outlook. The SARB forecast inflation to moderate to 3.6% in 2025 and to increase to 4.5% in 2026. Risks to the forecast are on both the upsides and the downside, with the balance of risks in the medium term skewed towards the upside. Program Director, let me now shift focus to developments in the domestic economy. I will start by outlining the monetary policy stance adopted by the bank during the review period. The bank pursued an accommodative monetary policy stance over the financial year 2024-2025, reducing the discount rate by a cumulative 50 basis points. The bank reduced the discount rate by 25 basis points to 7.25% in September 2025 and another 25 basis points to 7% in November 2024. This stance was broadly in line with the easing of global and regional monetary policy conditions, the lower domestic inflation outcomes, and the improved inflation outlook for the domestic economy. The bank maintained the discount rate at 7% in its January and March meeting of 2025, in line with prevailing domestic macro conditions and the increased economic policy uncertainty at global level. Distinguished guests, on the domestic economy, preliminary estimates indicate that Eswatini's real GDP growth slowed to 2.6% in 2024, down from a revised provisional estimate of 3.4% in 2023. The deceleration was largely driven by a significant slowdown in the tertiary sector, which is estimated to have grown by only 1.2% in 2024, compared to 6.5% in the previous year. GDP is projected to improve to 7.9% in 2025 before moderating to 5% in 2026 and 3.3% in 2027. The forecasted strong performance in 2025 will be driven by the commencement and acceleration in the implementation of large-scale public and private sector projects, particularly in dam construction and major energy-related projects. Risks to the projected growth outlook include ongoing geopolitical tensions, trade disputes, primarily involving the US and its trading partners, which could heighten uncertainty, disrupt global supply chains, and further strain already fragile trade relationships. Moreover, unforeseen delays in the execution of both the public and the private sector-led initiatives could further undermine growth momentum. I will now turn to inflation developments. Consumer price inflation moderated significantly from an average of 4.7% in 2023-24 financial year to an average of 3.9% in the financial year 2024-25. Inflationary pressures were broadly subdued during the 2024-25 financial year, driven by softening of supply-side inflation, particularly due to stable food and fuel prices globally and regionally, which led to lower imported inflation. Exchange rate movements were also generally favorable during the period under review. Eswatini inflation rate decreased to 3.3% in April 2025 from 3.8% in March 2025. Ladies and gentlemen, I will now talk about monetary sector developments in the domestic economy. In 2024, credit extended to the private sector continued to rise, largely underpinned by positive outlook activity. Private sector credit grew at an average of 8.4% in 2024, down from an average of 10% in 2025. The increase continued to be driven mostly by credit to the business sector, which registered a year-on-year average growth of 11.5% in 2024, down from a 15% in the previous year. Credit to the household sector registered an average growth of 5.4% in 2024, up from 3.8% in 2023. The improvement in household credit growth partly reflected gradual recovery as consumer finances stabilized, supported by rising real incomes and the slightly lower borrowing costs. In the first quarter of 2025, private sector credit accelerated further, reflecting a year-on-year growth of 10.8% at the end of March 2025. The increase continued to be driven largely by the business sector, which recorded a robust year-on-year growth of 18.3% at the end of March 2025. Credit to the household sector grew by 3.8% year-on-year in March amid subdued credit demand. In the short to medium term, private sector credit growth is likely to remain positive, supported by sustained economic expansion and increased credit demand from the agriculture sector, driven by favorable weather conditions. However, credit growth may be constrained by uncertainties in global economic prospects, particularly following the introduction of new tariffs by the United States. At the end of December 2024, gross official reserves amounted to 10.1 billion, notably higher than the 8.8 billion recorded in December 2023. At this level, the reserves were sufficient to cover 2.4 months of imports, down from the 2.6 months recorded in December 2023. This occurred despite the increase in reserves, primarily due to a rapid rise in imports during the review period. In the first 4 months of 2025, the reserves continue to rise, largely bolstered by the inflow of quarterly SACCO receipts in January and in April 2025. As of last week, Friday, 16 May 2025, the reserves were at 10.03 billion and sufficient to cover 2.3 months of imports. In the short term to medium term, the reserves position is anticipated to decline, largely due to a 20.4% reduction in SACCO receipts projected for the financial year or fiscal year 2025-2026. I will now turn to developments in the fiscal sector. As at 31st March 2025, total public debt stood at 36.1 billion, an equivalent of 37.8% of GDP, reflecting a growth of 5.1% on a yearly basis. The growth was attributable to both domestic and external debt, which grew by 6.2% and 3.7% respectively. The increase in domestic debt was mainly underpinned by the continued issuance of domestic debt instruments such as treasury bills, treasury bonds, as well as the central bank's advance to government. External debt was driven by disbursements made on ongoing project loans sourced from international financiers. I will now turn to developments in financial markets. The central bank actively participates in the domestic foreign exchange market and acquires foreign currency export proceeds from local banks as part of the strategic initiative to build reserves and provide liquidity buffer against effects of net capital flows. The total volume of trades conducted during the financial year 2024-25 amounted to 6.81 billion, with unmatured forward positions at the end of the year totaling 333 million. The US dollar is the predominant trading currency, accounting for 5.47 billion of the overall purchases. As a means of supporting the government to meet her financial obligations, the bank continued to provide advances to government, and this facility was accessed in different tranches as and when needed. The bank also raised funding from the Johannesburg Stock Exchange to the tune of 400 million rands following a successful listing of a 4 billion program. Ladies and gentlemen, allow me now to turn to developments in the external sector. Preliminary data shows that the current account in 2024 posted a surplus amounting to 1.202 billion after a surplus of 1.849 billion in 2023. The surplus in the current account is attributable to a positive trade balance that more than doubled from the previous year as the country's merchandise exports grew faster than imports. Additionally, the surplus was buoyed by an improved positive secondary income account balance, which grew by 23.7% from the previous year, driven by an increase in the volume of SACU inflows. In the year ended December 2024, the external value of the rand lilangeni slightly appreciated against the US dollar, and the euro but depreciated against the pound sterling. Compared to its value in 2023, the lilangeni gained 0.7% to average 18.31 against the US dollar. The appreciation in the domestic currency was largely due to a mixture of global and regional factors, which led to capital inflows into South Africa. The first quarter of 2025 was marked by a mild depreciation, which generally saw the rand lilangeni recording an average of 18.51 to the US dollar, down from 17.88 recorded in the fourth quarter of 2024. Looking ahead, the rand lilangeni will remain volatile in the short-medium term, sensitive to global and the South African economic factors. Distinguished ladies and gentlemen, allow me now to talk about inflation and monetary policy outlooks. The bank has revised down its short to medium term inflation forecasts. Downside pressures to the short-term inflation outlook are expected to come mainly from the lower South African inflation outlook, which remains muted when compared to the previous period. Whilst there are inflationary pressures coming mainly from higher crude oil prices and a weaker exchange rate, overall domestic food inflation outlook outweighs the outward pressures. In the medium term, oil prices are expected to moderate gradually, coupled with an appreciation in the exchange rate. In March 2025, the bank revised down its inflation outlook to 4.88% from 5.25% for 2025, 4.54% from 4.8% for 2026, and 4.3% from 4.57% for 2027. Over the short term to medium term, the bank will continue with its mandate of ensuring low and stable inflation. To achieve that, the bank is likely to maintain the accommodative monetary policy stance before gradually tightening it's considered tightening it. Through this, we will use our data to inform the decision. Despite the current moderation in prices, upside risks to the inflation outlook remain elevated, emanating from expected changes in administered prices, affecting fuel prices, ongoing trade policy uncertainties, as well as the persistent weak exchange rate. I'll now turn to bank supervision. The health of the domestic banking sector remains robust, as evidenced by sufficient capital buffers through having recorded a marginal decline from the previous year. Both the industry's capital adequacy ratio and common equity tier 1 ratio recorded a slight decline in the last quarter of 2024-25. Capital adequacy ratio declined to 17.41%, but remained above the regulatory minimum of 8%. CET1 ratio fell to 15.44% compared from the 16.25%, but still exceeding the minimum requirement of 4.5%. The Eswatini banking sector's total assets grew by 11.5% between March 2024 and March 2025, from 28.2 billion to 31.4 billion, while deposits within the banking sector grew by 12.8% during the same period, from 19.4 billion to 21.9 billion in March 2025. Deposits, which are considered the common funding source, continue to account for a large portion of the bank's loan portfolios, with the loans to deposit ratio sitting at 84.4% as of March 2025 from 83.5% in March 2024. The assessment of asset quality revealed a marginal worsening position, with non-performing loans exhibiting a slight uptick from 7.1% recorded in March 2024 to 7.2% in March 2025. The domestic banking sector witnessed reduced profitability advancements in the year under review, with industry after-tax profits decreasing by 2.4% year-on-year to 142.5 million compared to the previous year's 147.1 million. The liquidity status within the banking sector exhibited resilience, remaining above the minimum statutory liquidity ratio set at 22.0% for commercial banks and 20.5% for development and savings banks. As of March 2025, the industry's liquidity ratio stood at 32.9% compared to 33.4% recorded in March 2024. I will now turn to policy, conduct, and enforcement. The bank issued the cloud computing guidelines to the industry for use and came into force in 1st July 2024. This guideline provides guidance to financial institutions to engage in cloud computing services. The bank received 3 banking license applications for consideration during 2024-25 period. These applications show positive response to the bank's current proactive strategy to open up the banking industry and create a wider scope for more banks to set up operations in Eswatini. The bank completed baseline inspections for the domestic banking ecosystem. Significant progress has been made by the sector players in addressing the identified deficiencies. We applaud our banking sector for the strides made in addressing the inspection findings. On the other hand, the Consumer Credit Regulations Working Group, comprising of the CBE, FSRA, and Center for Financial Inclusion, working under the auspices of the World Bank Group, have concluded the drafting of the Consumer credit regulations. These draft regulations are aimed at formulating a guiding framework to conduct a thorough affordability assessment, prevent reckless lending and over-indebtedness, promote responsible lending, reduce NPLs portfolios, enhance access to credit, and ensure financial stability. I will now speak on the national payment system. In collaboration with the Ministry of Finance and the Eswatini payments industry, the central bank finalized the drafting of regulations to operationalize the National Payment Systems Act 2023. The draft regulations were submitted to the Ministry of Finance for the standard promulgation process with the aim of establishing them as legitimate secondary legislation. The Central Bank of Eswatini issued a directive to payment service providers routing low-value cross-border electronic funds transfer transactions and receiving cross-border electronic funds transfer transactions from the common monetary area. The Central Bank directed that with effect from 31st March 2027, all payment service providers that are presently routing low-value cross-border electronic funds transfers within the CMA through the SADC RTGS, Real-Time Gross Settlement System, should finalize the process to migrate all offshore low-value cross-border electronic funds transfers within the CMA to a regional low-value payment system. The objective is to regularize the execution of these transactions through an appropriate retail payment system designed to low-value cross-border electronic funds transfers and direct payment service providers to ensure that the execution of these funds transferred to and from the CMA does not have a negative effect on the transparency, efficiency, and cost-effectiveness of payments to consumers and businesses. The Central Bank continued to implement a Eswatini payment switch project featuring fast payments, open banking, card-based point of sale, and card-based automated teller machine modules. The EPS facilitates near real-time payments in its first phase. It will introduce third-party service providers in the second phase, followed by domestic card-based transactions, switching in the final two phases. As part of the phased implementation, the fast payment modules went live in December 2024 with 3 out of 8 participants. The 4th and the 5th participants joined in February and March 2025, respectively. However, due to challenges such as misalignment in technical standards and delays in vendor resources, the delivery has been slower than anticipated. Therefore, the last 3 participants are finalizing the testing of the fast payment modules of the EPS, and the last participant is expected to go live by end of June 2025. Program Director, allow me now to talk about the financial technology developments, the fintech space. The bank continues to build its technical capacity around the central bank digital currency through its ongoing participation in Project Sunbird, a collaborative initiative among the CMA central banks exploring cross-border applications of the CBDC. The bank has continued to operate the regulatory sandbox as a framework for testing innovative financial products and services under a controlled regulatory environment. The bank continued to research and monitor developments in crypto assets during the 2024-25 financial year. The ongoing monitoring reveals sustained and growing interest from Eswatini in crypto asset investments, primarily through service providers based in neighboring countries. The CBE recognizes the importance of maintaining appropriate oversight of this emerging sector, particularly given that crypto assets remain unregulated in Eswatini. The global crypto asset landscape continues to evolve, with many jurisdictions implementing regulatory frameworks. I will now turn to developments in our development finance unit. The bank, in collaboration with participating financial institutions, is currently reviewing its existing participation agreements and related guidelines for the small-scale enterprise loan guarantee scheme. This is meant to cover existing operational gaps, expand the scope of the scheme, and enhance alignment of the rules with the revised Eswatini National Policy for MSMEs 2024-2029. During the year ended 31 March 2025, this scheme issued a total of 146 new guarantees valued at 35 million, covering loans amounting to 40.2 million from various participating financial institutions, contributing to a 15.9% increase over the year. Program Director, ladies and gentlemen, I'll now move to financial surveillance. The CBE remains committed to safeguarding the integrity and soundness of the financial sector through its robust anti-money laundering, counter-financing of terrorism, and proliferation financing framework. This is done through effectively executing the risk-based approach to supervision of the financial sector, continuous improvements in supervision, legislation, collaboration, and capacity building to ensure alignment with international standards. In response to the 2022 mutual evaluation conducted by SAMLAC, the Central Bank has contributed to the strengthening of the ML-CFT regime of the Kingdom of Eswatini. The bank, together with other national stakeholders, supported the Ministry of Finance in drafting and promulgating the Anti-Money Laundering, Counter-Financing of Terrorism and Proliferation Financing Miscellaneous Amendments Act 2024, which enhances the legal framework and strengthens compliance with the Financial Action Task Force 40 recommendations. I will now move to speak about operational issues at the Central Bank. During the period ending 31 March 2024, banknotes issued amounted to 6.6 billion from the 6.8 billion issued in the previous year. Coins issued over the period amounted to 53 million, indicating an increase from the 38 million reported in the prior year. At the end of March 2025, currency in circulation was at 1.482 billion, indicating a 10.2% increase from the 1.345 billion reported in the previous year. The bank issued a 50 Emalangeni circulating commemorative banknote and a 50 non-circulating commemorative coin in commemoration of its 50th anniversary. The commemorative banknote and the coin were unveiled by His Majesty the King on the 10th of May 2024 during the bank's Jubilee celebration. This banknote and coin serve as a tribute to Eswatini's journey of transformation and progress, while celebrating the rich heritage and future aspirations of the country. The 50 commemorative banknote was released into circulation on 1st September 2024. The bank has been recognized for 3 international awards during the financial year, 2 awards by the International Association of Currency Affairs, and the 3rd from high security printing renaissance. These awards underscore the bank's vision of being a center of excellence and a central bank of reference. The bank has reprinted E20 and E10 banknotes to be released in circulation in the first quarter of financial year 2025-26. Some of the changes on the banknotes include the country's name change from Swaziland to Eswatini, the Swati narrative on the obverse, the incorporation of the governor's name and signature, Philemon Fana Mnisi. Oh, is that the governor? And an enhanced security threat. The bank has noted a decline in discovery of uncontrolled die-stand banknotes resulting from ATM bombings. However, the public is reminded that die-stained banknotes are presumed to be proceeds of crime, and as such, notes should be reported to the central bank or the nearest police station. Program Director, allow me now to make some remarks on the financial stability. The financial system in Eswatini remained broadly stable and resilient over the past year, benefiting from improving global and domestic conditions. Eased inflationary pressures and a slowdown in global interest rate hikes provided relief to financial institutions, while domestic efforts to strengthen regulation and supervision further supported financial system stability. Externally, reduced load shedding in South Africa and a more stable political environment positively influenced Eswatini, despite ongoing concerns around sovereign debt and currency volatility. Domestically, financial conditions improved and fiscal pressures eased slightly due to a stronger government revenues. However, high public debt, the nexus with the financial sector, particularly banks, and increasing spending commitments remain a key risk. Household debt levels moderated in relation to disposable income, reflecting increased income. However, unsecured lending remains a concern. The corporate sector continues to face stress from declining profitability and high leverage, particularly the SMEs. Non-bank financial institutions continue to expand their influence in the financial system. However, risk persists due to sector-specific exposures, including concentration in the pensions and insurance sectors, and the high level of unsecured lending by credit financial institutions and savings and credit cooperative societies. The bank has finalized the Deposit Protection Fund implementation framework, which is critical for enhancing public confidence and safeguarding depositors, particularly in the event of bank failures. The Deposit Protection Fund is designed to protect depositors by providing limited compensation in the event of a bank failure, thereby promoting public confidence and financial stability, financial system stability. With the implementation framework now finalized, initial steps towards the full authorization of the fund will commence in the current financial year 2025-26, making a key milestone in strengthening Eswatini's financial safety net. Program Director, distinguished guests, as I conclude, let me emphasize the following. The year 2024 presented multiple challenges at global and regional level, some of which have been carried over to the current year. The global environment remains highly fluid, with heightened economic uncertainty, which is expected to weigh on global and regional growth, and by extension, have a spillover effect on the domestic economy. Domestically, Inflation remains moderate, and the outlook points to a moderation. However, risks to the inflation outlook persists, and these include global and regional economic uncertainties due to the US trade policies and geopolitical conflicts, administered prices, and a weaker exchange rate, among others. The bank will continue to monitor developments at global, regional, and domestic level, and will use all the instruments it has at its disposal, optimizing its independence and using the law at its disposal in pursuit of its price and financial stability objective, addressing systemic risk in order to ensure that there is a conducive environment for growth and sustainability in the Kingdom of Eswatini. Finally, ladies and gentlemen, I would like to extend my sincere thanks and appreciation to the Minister of Finance, the Portfolio Finance Committee, and all relevant stakeholders, the officials at the Ministry of Finance, the bank's board of directors, members of the MPCC, financial institutions here present, both banks and non-banks, all staff of the bank, as well as other key stakeholders for their cooperation, commitment, and dedication to the attainment of price and financial stability that is conducive to the economic growth and development of the Kingdom of Eswatini. I have got no doubt that I can continue to rely on you for unwavering support and dedication in the execution of our mandate in the interest of all Emaswati. I thank you all, ladies and gentlemen. Good morning.
Thank you, Governor, and may I request that we give the Governor another round of applause. And I also want to appreciate how well you managed your time, and to appreciate the Minister who might have to sneak out at this particular moment. Thank you again, Minister, for honoring us this morning. It is now time for the questions and answers. And who is managing my Lido? And may we have the questions? The Governor is ready. I think you have heard what we did in the past year and where we think we are heading amid all the turbulences. And I think some of us woke up or slept yesterday to look at news and watch our president for South Africa interacting with the president of the US. And I don't have a mic. They're coming.
Oh, okay.
Thank you. Thank you, Governor, for such an elaborate presentation. The name is Temigosi Dlamini from the Coordinating Assembly of NGOs. Unfortunately, I have a number of questions. Can I quickly go through them? The first one, Governor, is we see that several African countries are already easing their monetary policy based on the inflation outlook and interest of promoting economic growth. So the question is whether we're likely to see some easing of monetary policy in the country as well, in light of those kind of requirements. The second one is the question around the unsecured lending. I was hoping that the Governor will show us how the numbers look like and the trends. because we see a lot of troubling developments in country in terms of the issues of psychosocial, psychological conditions caused by indebtedness amongst our people. So I was wondering whether the governor is monitoring those developments and really taking some actions to try to curtail that. The third question, Governor, is around how do we intend to balance the anti-money laundering controls that we have put in place and the need to ensure that our Amaswati entrepreneurs are role players in the global economy, such as the Africa Continental Free Trade Area.
We'll come back. Let's have a round. Otherwise, you'll go through all your 10.
Thank you very much, Governor. I'm Henrik Franklin, United Nations Development Program resident representative in the Kingdom of Eswatini. Thank you very much for the presentation, and I want to congratulate the government and the central bank for the prudent monetary policies and very positive indicators. I do hope that the growth that we're seeing this year in the GDP, I saw some of the downward trends, but I hope we can prove ourselves wrong and really see the country GDP growth progressing in as most positive direction as possible. Two comments. One is, I think MSMEs are a driver for the growth of the country, and I saw you have the guarantee scheme, and it was almost about a 16% growth in guarantees provided, but how can we work more towards increasing, and how can the CB further support MSMEs moving forward? And we're also pleased as UNDP to work with the central bank on the greening the economy, and I think with Eswatini being more and more vulnerable to climate change, I'm curious to hear a bit more about how you see the CB promoting a green economy moving forward. Thank you.
Okay. Let me allow the governor to respond.
Thank you very much. As you know, the policy statement is a collective reflection of what the board has done and what the MPCC has done and what management has done and staff. So should the questions be difficult, I can easily pick any of the board members to answer, any of the MPC members to answer, any of the EXCO members, or even the staff members to answer. Let me start with the comments from Mr. Dlamini. As you heard in my reflection on the global perspective with regards to monetary policy, it is truly globally an easing of monetary policy, more cautionary, either hold or reduce, dependent on data. In that particular circumstance, we need to understand that informing monetary policy position, it's a factor of a number of variables that you take into consideration. So whilst globally and also in Africa there is a monetary easing, I cannot just say with regards to Eswatini, that is what we are going to do. We will look at the data at that point in time. For example, we have got our monetary policy meeting next week, and we will be looking at the data. We'll look at what's happening in our anchor economies, in how we are relating regionally, globally, and then inform our decision. There are key things that we would look at. Number one, you've already heard what I said about inflation currently and the outlook. We look at the performance in the financial sector. We look at growth. We look at a number of variables. And then we make sure that at the same time we protect the parity of the Lilangeni to the rand. So all these factors are taken into consideration. So I cannot have a silver, a bullet answer and say we are going to have an easy monetary policy position. I did say that indications are that we are going to see an ease in monetary policy position, but one cannot specifically say that it's going to be going down, it's going to be a hold, or it's going to be a marginal increase. But I think as you look at the data, that's how you would inform monetary policy at that point in time. With regards to the unsecured lending, Let me mention that I summarized close to a 100-page document in about 42 minutes. So there is a full detail where you are going to see the numbers, the trend, the sectors that are under strain with regards to unsecured lending. And then if you recall in my presentation, which I summarized, I did say that we are seeing a bit of strain, especially in unsecured lending in businesses and also in the households. And this is also a concern. And that's why the overall increase in non-performing loan is at 7.2%. The benchmark or our convergence reference for CMA is around 5%. So we are on the upper side and we are keeping a careful eye on this. And by the way, that is also another variable we look at when we are informing our monetary policy. Because as we announce the bank rate, the banks then effect their prime lending rate, and there is a transmission effect of this rate into the lending space. And hopefully, as we accommodate monetary policy, that should also translate to easing the burden on the debts that our people take for benefit of consumption or any productive need that they may have. So, but if you want to see the actual detail, if I were to unpack that on its own, that could be a session for the morning. So I encourage everybody to go through the policy statement with all the detail, and if there are any questions, the team is here, they can assist. I don't see our Director of Financial Regulation, but she's somewhere here. Or if not, you can speak to our Director of Research. If he can just stand up and or raise his hand, it can be the point of contact. Or if you don't even go too far, just jump the man next to you and talk to Dr. Nzinisa over there. He will give you the detail. The issue of anti-money laundering control, I think this is a very important one. We need to protect the country. There are many people that want to take advantage of Eswatini, being a very friendly, open economy. Some people see this as a playing field where they can wash out proceeds that are illegal. And as a central bank, we always keep an eye on that. And I want to encourage our regulated entities here that always be on the alert. Watch out for these people that come, under the disguise that they are bringing huge investments. Some say they are bringing 450 billion euros to the Kingdom of Eswatini. And you ask them, why do you want to do it? We just love this country. It's just the love of this country that we have got these 450 billion euros for you. Just decide where you want to go. But Governor, just sign here together with the Minister of Finance, with sometimes even with the heads of state, the Prime Minister, just sign here very quickly. When this 450 billion arrives, you will receive it. Half of it, you will have to return it back. Then you can use the difference. Clearly, when you see something like this, it is just red light. So we are going to do all that we have. The laws that we have now are much tighter, and we believe that we are on the right path. We do encourage entrepreneurship. At the bank, we want people to thrive. That's why we have got the SME schemes. That's why we have got, even programs within the bank. Our financial inclusion initiatives, all these are aimed to make sure that everybody participates in the economy. And we do engage the banks. And actually, not to use a strong word, encourage them or use moral suasion. I almost use the word pressure. But we use moral suasion for them to lend. They must intermediate. They shouldn't just take money and park it in treasury bills and treasury bonds, but they must intermediate, take the deposits and lend them, especially to the SMEs, because SMEs are at grassroots level and they're the engine for growth for the economy, and they are here to stay, and that is what we like. And that takes me to the comment that was made by the head of the UNDP on the SMEs. We are very excited, and thank you very much, Hendrik, for supporting the central bank on this. Because, you see, if we promote the SMEs, these people, they are going to get their proceeds. They are going to plow them back in the country. That is number one. So they create jobs, they are plowing back the proceeds in the country, they are paying taxes in the country. So the big companies are good, but don't forget, one of the conditions they write there, would you allow me to, what do you call this word? Expatriate my profits quickly. They want to expatriate profits. But SMEs, they will never even look for that because this is home. So we are intentional, we are strategic to augment this. In fact, we want to take a slant towards export-oriented SMEs. Because when we drive export-oriented SMEs, that is going to bring Forex. When we have got that Forex, it's going to bolster our reserves. So that is the strategy that we have in a broader context with regards to the SMEs. Greening the economy. I realize that I did not highlight that in my speech, but if you read the policy statement, you will see that we are also intentional, both internally and externally, in the industry to drive greening the economy, climate change, and we are working with the banks even on regulations to ensure that they also participate in greening the economy. Yesterday, I had our internal audit together with a graduate trainee giving me a proposition of how strategically are we going to drive greening the central bank, and we are going to have a clear plan. So again, we appreciate the support of the UNDP in this regard. So I hope I have exhausted the reflections on these two that have been submitted. Thank you.
And thank you, Governor. Just on the indebtedness that Mr. Dlamini was worried about, part of it is education. And I think I want to challenge civil society to help us in this drive of educating Emaswat. Contracting debt is sometimes addictive. And then you see the psycho, social, economic challenges that we then experience. So the central bank is doing its part, the banks and the non-banks are doing their part. Civil society should also come through and help us educate Emaswat. With that, Governor, there are 4 questions and 1 in the room. So can we give the opportunity to the virtual participants on the questions here, Governor?
The first one, with regards to the sovereign fund, a sovereign fund is ideal for a country. Basically, it's one way of discipline. When you have pooled government resources, you pay them aside, they help you to deal with shocks, you know, in the economy. We all know that we are dependent on SACU. So if government drives this wealth fund, strategically, it will help the country in the long term. Right now, it's still at its formative stage. The central bank is aware of it, is providing necessary guidance, advice to the ministry. In fact, we have got some of our team members in financial markets sitting in the committees where this is being formulated. It's currently at its infancy stage, but we believe that it is certainly going to assist. It is different from the stabilization fund. The stabilization fund is a fiscal measure. So when the government has got income, for example, this year, it could come from SACO anywhere. When they are doing domestic mobilization of resources, so when they see in that fiscal year that there is a need to create a buffer to deal with any potential swings in that fiscal year, then you do a stabilization fund. That is what we currently is in place. There is about, initially it was about 2.5 billion. Government has started drawing on that because the SACO receipts came down this fiscal year. So they are drawing down about 1 billion. And by the end of the year, they would have drawn down the 1 billion. And again, maybe next year or the following year, the SACO receipts go down again, they will use the stabilization fund. So that is totally different from a sovereign wealth fund. A sovereign wealth fund, you look at where government has assets, you ring fence those assets, you make those assets grow over time, and they provide a buffer to the nation. And it is normally run independently. So you set it up, but you want it to be run independent for the benefit of the economy. So, the stabilization fund is performing very well. It is administered at the central bank, and it is also, to some degree, has cushioned our reserves because we keep the stabilization fund in foreign currency, and we define ZAR as a foreign currency. So that's how it is helping. As government is now drawing on that stabilization fund, it is impacting our reserves, hence the import cover that I reflected on in my presentation. Yeah, this is a major issue, but I can just answer it directly. It is not impacting the PEG. As it stands, there are many factors that you have to take into consideration to impact the PEG, the currency in circulation, and many other variables. So it is not impacting the PEG, and we do keep a very close eye. At the moment, it is definitely not impacting the PEG, but the normal standard benchmark by the Bretton Woods Institutes is that it should be around 3 months. That is just a level of comfort. But in the past, import of cover had dropped to about 1.5, 1.3. So basically what it says that, can we afford to pay for our imports? You can do it if you have got a value for 1 month, but ideally you have to have a leeway or a period of about 3 months. We just have shy of 3 months at the moment. Skumuzo, answer that one. The top one. Can you pass on the mic to Skumuzo?
Why did you give me? Good morning. I'll touch on two. I know the governor has touched on the other one, on the relevance of the 3 months. It's part of the reserve adequacy that we look at, and is stipulated by the IMF, as the governor has indicated. There are other matrices that we look at, such as your coverage of reserve money, which should be at least 200%. We are averaging above that threshold, so there is no impact on the PEG currently. And besides, I think if you look at our reserve position, we are above 10 billion, which indicate that over time they've been increasing. It's just that the import bill has also risen over that period. So that's why you will find that we are not going to be able to cover enough. And then the differences between the two, I was trying to write the response, but one of the things that we need to look at is that the structures of the CPI between Eswatini and South Africa are different. But the key one is that your administered component of inflation for both Eswatini and South Africa are relatively high. In Eswatini, we have been able to contain administered prices such as your electricity and the like to below double digits. In South Africa, they have been above 10%, which will then spill into the forecast in terms of their inflation. Current inflation is around 2.8 in South Africa, 3.3 for Eswatini. And when you look at the drivers, you can see that for both the economies, you can see goods inflation has been rising over time with a moderation in food inflation. But going forward, given the drought in the region, you do see upside risks in both Eswatini and South Africa around food inflation. The other one is fuel costs. They've also, you see the palm prices have not been changing as you see crude oil prices coming down. But over time, you might see that impact also coming in. And I think for Eswatini, you might find that there's a little bit more going to the levy because we want to establish the authority. So those few points will make it that in terms of the outlook, you might find a heavier weight for South Africa to have high inflation over the medium term vis-a-vis Eswatini during that same period. Thank you, Governor.
Thank you. The next question, DG, Program Director, with regards to the high auction, you know, this is also very worrying. We also read the papers, and if you remember the percentage that I quoted, we were 7.1%, we're now 7.2% non-performing loans. So it is very true that there is definitely a strain on the portfolio book, on the lending book by the banks. This could be asset-based finance or ordinary loans. But that is truly reflected in the percentage that I spoke about. So I don't need to expand on that. So we are not surprised to see the non-performing loans. The numbers are showing that. But at the same time, we are seeing growth, which means people are still taking loans, and there are those that are doing well. But don't forget that those numbers could be skewed by just one large sum of maybe an entity, could be a manufacturing entity, it could be an agro base taking a big chunk of loan. That will push the numbers. But certainly the non-performing loans. And in terms of controls, we have started to go deeper per institution to see where is the pain, so that we can support those regulated entities accordingly. The three questions there, how will the central bank monitor the effectiveness of policies this year? This is a very, very important question. You know, one of the things that we have in our policy and enforcement unit is to, on an ongoing basis, we look at the effectiveness of our policies. We see how, when we engage with the public, when we engage with the regulatory entities, when we announce our monetary policy. So this is an ongoing. We have got a whole team within the bank that ensures that. And we do that by various inspections, report backs to the central bank. So it is what we do at all times. And we continuously relook at our laws as well to see if they are sharp enough to ensure that we have got effective policy. Ufuna ukumisa, Mark?
Chair Governor, I wanted to be interactive, so we've given the opportunity to the virtual ones. There were questions in the room. I think
okay.
Nati had a hand.
Angisale ngicedzela nje lawa. Ngeke ngifike kule la thank you lapha endasi. Angeke ngicedzele lawa. What is the outlook of the foreign exchange reserves? The foreign exchange reserves are under severe strain. As government makes payments, as I've indicated, you see we are around the 10 billion. We are doing all we can, even as a central bank, to look at innovative ways of bolstering and protecting the reserves. But it is a fact that the reserves are going to be under huge strain, especially when the SACU receipts are coming down. The SACU receipts have got a positive effect on our reserves, but when they are coming down, they've got a negative effect. So the outlook there, I would say, is actually to moderate to, from moderate to negative. With regards to the reserves, diversifying our reserves into gold, yes, we are driving this, we are active on this. In fact, if I'm not mistaken, by next year, we will be reporting a portfolio of our reserves that has diversified into gold. And our main objective there is to mediate or intermediate the natural resources that we have in the country. So especially the gold that is exploited or explored or exploited. Let's use both words. I think they can fit somewhere. But whatever gold that we have in the country, we want to make sure that we take that gold, we give the persons a malangeni, we take the gold, and then we decide whether we refine it or we keep it. But that is our objective. The natural resources of this country, they must belong to this nation. And the central bank will play its role. And we are hoping, legislature, member of MP, that portfolio committee, that we get assisted in sharpening our central bank law to be able to effectively implement this, this initiative. And then, or the deposit insurance, this will not affect customers for now. In fact, the intention is to protect the depositors. So we are working with the banks for now. And our objective actually in the long term is that even non-bank financial institutions must have some form of a deposit insurance protection. So, but for now, we are working with the banks to ensure that through some funding mechanism, we are able to protect those depositors that could be the instance of a run or a failure on the bank. But certainly, there will be no pass-on effect to pass-through to the customers at this point in time. I think we can get honestly in the details on the coverage and how it works, the mechanism. Let's just read it in the policy statement. You will find the details there. But the bottom line is that the most vulnerable ones are the ones that are generally protected by the Deposit Insurance Fund. Let's take questions now on the floor.
Thank you, Governor. I saw Mr. Inati's hand. I am assuming that he is going to buttress some of the policy directions you have articulated, because we're in this together as a member of the MPCC.
Did you really have to say that? Governor, good morning. It's so good to see you.
Thank you.
Thank you for giving me the opportunity also to say just a few words. I did just get out a little bit outside. I didn't know there were paparazzis outside, and they caught me to ask, what do you think? I don't know, maybe it was a bad response. I said, the man is on fire. And then they say, explain. Now, this is what I told them. Firstly, I don't care what you think. It's clear. It's not all doom and gloom for the country, for the economy. And certainly, when you look ahead, it's not all doom and gloom. And to us, particularly the private sector, we take that as a positive, and indeed very, very thankful. And we also would like to recognize the very good work done by the central bank in really monitoring monetary policy as effectively as they have done, in large part containing runaway inflation, especially for the past 4 years, to where it is. I think that's good because, as I've told them outside, inflation causes poverty. And I will continue saying that. And by the central bank being vigilant and proactive in managing that, it's a very good thing. And we just want to say to the central bank as a private sector, thank you. I think this is a good opportunity to give him a big hand of applause. And then, secondly, the payment system, which has come on stream. For some reason, I don't know, maybe it's me, I just think it's such a big deal. And I just wonder why, as a country, we are failing to celebrate this amazing achievement that all our transactions, which used to be settled in South Africa, are now localized. Our transaction fees have gone down. It's faster to transact. I think it's something just we need to congratulate ourselves for having achieved. And lastly, Mr. Governor, on the small scale credit guarantee scheme, you showed some very worrying default figures. I think it was 4.66%. Let's just say 5%. That's a bit high. And the question is, how could that be when the central bank has cash covered those loans? If only up to 50%, I'm thinking back in the day it was 50%. And the banks take the other 50%. And we hear, and by the way, I'm saying this, I've already scouted the room to see, are there any bankers here? Bankers who I fear. There are none. So, now, the question is, I think you had asked banks also to assume a certain level of risk. And we are well aware that some may or may not be asking for collateral for the other 50%. And the question is, if there is a default rate of 4.66%, on whom is that credit default? Is it on the central bank or is it on the bank side, the 50% side of the bank? But that's my question, and to say thank you for everything. And DG, you didn't have to say what you said, but you did anyway.
And
You're just being yourself as usual.
And I think we, going back to the governor, 1 minute.
All right.
Winding
Thank you
down.
very much, Inati, for the very good insights and the reflection on our policy position. Buttressing that point of ensuring price stability is very key in the mandate of the bank. With regards to the SMMEs and the scheme, the credit guarantee scheme, and that's why I said in my statement that we are reviewing those guidelines. We really want to see why are these defaulting, because the banks are actually providing the credit and we are guaranteeing it. So we end up paying, in the event of a default. So I don't think the problem is with the banks. The problem is with the institutions. So we need to see the construct. What are they doing? How are they organized? Do they have mentors? And all these things. I'm happy I see SEDCO here. We are strengthening even our collaboration with SEDCO to make sure that those SMEs are not just left in the ledge. They are supported, they are guided, so that whilst they are given the money, we provide the guarantee remain to thrive. And we are going to move towards queuing them towards exports, because sometimes it's just the market dynamics. When you have got probably a difficulty, we know government is battling with the payment of arrears. So they will be part of those as well. So if government is not able to pay them and it has got a spillover effect, the banks call on their loans, and when they call on that loan, they then call on the guarantee. So I think it's something that we need to look at holistically and more of a strategic approach, which is what we want to do this year. And the last one there, I think I've spoken about more or less all those there. Please read the policy statement. But with regards to AI, I just want to emphasize that at the bank, we are also not just, being passive about this. We are looking at how best we can use AI. Of course, there are risks with AI, as there are benefits with AI. So in terms of our policy formulation, doing various operational efficiencies, we do adopt AI. And if you need any further knowledge on this one, I am requesting my head of IT there to stand up so that whosoever asks that question, you can go and speak to him. With that, ladies and gentlemen, it is truly an honor and a privilege for you to be here, and those that have joined us virtually, we are very much grateful, and thank you for listening to the policy statement for the year 2025-2026. Thank you. God bless.
It's interesting, you are calling me Mr. I was in Mozambique, I was being called doctor. Program Director, Governor, please allow me to write on the protocols that have been observed. Ladies and gentlemen, a very good morning. One of the key highlights of the governor's presentation is that the global economy is facing significant challenges, particularly due to the ongoing trade uncertainties and geopolitical tensions. The fluid global environment calls for increased collaboration between stakeholders to ensure resilience in the different sectors of our economy. The bank remains committed to its mandate of ensuring price and financial stability. In doing so, it will continue monitoring global, regional, and domestic developments and to use all instruments at its disposal to pursue its mandate. Ladies and gentlemen, may I reiterate that the bank cannot individually achieve its mandate without stakeholder cooperation. In this regard, the bank would like to extend its profound appreciation to all its stakeholders in ensuring that the price and financial stability objective is seamlessly achieved. The bank will continue with its oversight to ensure resilience to financial shocks by maintaining a robust and resilient banking sector that is supportive of economic growth whilst safeguarding depositors' funds. Ladies and gentlemen, as we come to the end of this event, on behalf of the bank's board of directors, management and staff, I want to thank you for taking time to join and participate in this year's Governor's Annual Monetary Policy Statement. With these few remarks, I thank you all and may God bless you as you travel back to your respective workplaces. I thank you.